Or you, because you're hosting.
Well, good afternoon. In the interest of time, I think we'll get right started today. Thank you all for joining us. My name is Evan Ford. I lead business development at New England Excess Exchange, and Diana Duke is our senior flood underwriter. She leads our flood insurance program over here. So, if you're not familiar with us already, New England Excess Exchange, we're a property and casualty insurance wholesaler and managing general agent. Been serving independent insurance agents in the New England region for more than 40 years. And I can share with you some literature about all that we do, but today we're really here to talk about flood insurance. In recent years, historically, flood insurance is been something that people go to the federal government for. The National Flood Insurance Program has been kind of the only show in town. Now, recently, in recent years, the private market has started to form and become and mature, and really has started to come into the mainstream recently, particularly with FHA approving private carriers for federally backed mortgages. So with this evolution has brought more options and a lot of benefits for insurance, but also introduced more complexity. So we feel that it's really important to have, an independent, your independent insurance agents and independent broker like us to help navigate that world and really be able to provide the best solutions for customers. So we currently have 19 carriers we've pulled together. Diana's marshaled kind of order amongst all of them and actually made them all accept our one-page application, which has sort of just the essentials, and I'll provide that to you after this as well. And before just handing it over to, I just really wanted to say thank you so much to Ryan Thiel at InsureCom for bringing us all together here. You really hope that in the event of a flood, people have the coverage in place so that they can go to a company like InsureCom to make them whole again after that loss. And I also really encourage you to talk to Ryan, get a demo of their emergency response planning software. It's just it's a free service InsureCom offers, and it's a really good measure to get in place to make sure you're ready to jump in the event of a flood, because every minute really counts in terms of the size of the loss. I also really wanted to thank the folks at Evernorth that are joining us today. It's great to, thank you, Sharon Vale, for bringing folks together. I'm really glad that you're taking the time to, learn more about flood. And thank you to all the independent agents that are on here as well. We can provide a list. I haven't confirmed this with all the agents online, and I will before I do this. But hopefully, provide some independent agent contacts to you that you can go to for more information, and they can come to us as well. As a wholesaler, we don't work directly with insureds. We work through independent agents. So it's important to have a trusted agent to work with, and you got some of the best here on the line today. So I want to just 3 minutes. I want to close it at that.
That's all I can give you, Evan. This is my part of the time.
Yeah. So I'll just hand it over to Bandit to take you through this.
It's like, hi, everyone. Thanks so much for stopping in. And yes, thank you, Ryan. Appreciate making any and all connections. We're all part of we're all on the same boat, really, from either insurance perspective, from being an insured, being an agent, talking to insureds, and of course, the people being there in the time that you might actually need that insurance to help get everything repaired and kind of get your life back going where you want it to be. We want it to take as little time as possible to kind of make you right. So with that, let's give a little chit chat. So I picked a few topics today that I'm going to breeze through some because there's really a more meatier section that I think more people want to hear and talk about. So as a quick rundown, we're going to just talk about what flood actually is, the types of insureds that are out there and what their risk exposures might be. Quick talk about the different flood zones that we know that the NFIP, or FEMA rather, has kind of laid out for us a long time ago, and what we can do to consider that. some risk mitigation things that can be put into place. And again, teams like Ryan's, that's where that might come into play. And we're going to give a quick coverage comparison of just kind of what FEMA flood coverage is offering and private flood coverage is offering. And even though I only work with private market flood, like both programs need to exist. So I'm not saying this is better or this is worse. I'm just kind of pointing out who has what and do they have what you need, basically. And then I thought it would be fun to kind of give an example of a primary residence pre and post flood. Here in Vermont last July, we had a significant amount of flooding. And this example is definitely close to my own heart because it is my own home. So we'll kind of go through the details of pre-flood, what quoting would have looked like, what happened there, what kind of had to be done to get back to whole, and then what it looked like from getting paid out from either a FEMA policy or a private flood policy. And then what it would look like to buy insurance again after you've kind of already had a loss. And then there's a couple of discussion questions that I'm hoping to put to you all and hope that you'll provide some feedback or ask that question or what your thoughts might be, because that's really what this is all about, to have you guys leave here thinking more about flood, talking about it, and kind of maybe even changing perspective or changing what you used to know. This line of business has evolved greatly over the last 50 years, although the education portion for it is still a little stale. Most often you don't see classes or things like this for private, other than one carrier telling you, this is what I can do. But this isn't so much about saying these are the markets we have and I can get you the best quote. Even though I may be able to do that, I really want you to be able to leave thinking to yourself, did I know that that was a risk exposure that this insured would have had, so that anyone in the chain can kind of help fill that void? And then, of course, questions at the end, because Evan thinks you might have some. So basically, what is a flood? When we're talking just regular people, down the street at the bar, it's basically any surface water that's in a place where it normally isn't. So for me, in this room, no flood here. If it fills, that's a flood. But when it comes to insurance, it's very different. And the best answer is it depends on what your policy actually says. So first example here is what NFIP's definition is. And I won't read the entire thing, but ultimately it just says a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or 2 or more properties, at least one of which is a policyholder, that has been basically overflowed with water from any kind of source. And in this case, they also include mudslides and certain collapse due to that same water being there. Now, when it comes to private, I could give you all 19 examples and they all be different, and I'd have to be spending, 10 minutes on this slide. But there really isn't a fixed definition of flood. Everyone is somehow rooted in the original NFIP form, because in order to offer private flood insurance, you have to offer what they do, but more or broader or better. That's the whole point of being able to offer private flood. You have to do at least what we would do, but more. So every definition kind of does that. They might change a little thing, they might change a big thing. Like there are certain things that private will do that NFIP doesn't. I think one that always sticks out to me is that they offer more coverage or different coverage that the original form kind of doesn't. And they are very narrow or very broad. So I won't waste too much of your time on that, but it always depends on your form, no matter where you get your policy. With that, we have basically 3 groups of insurance. So residential would be like your homeowners, your renters, any building that's just residential with 1 to 4 units, a single family rental or a duplex, things like that. And then commercial, ultimately it means some type of business is done there. There's also those cases where you might have a business at the bottom, apartments on top. That too would be considered commercial, mostly because you have that commercial exposure, and the form answers different for a commercial versus a residential home, no matter where you get your policy. And similar with condo associations. You have residential condos, you have commercial condos. So those are the 3 types of big insureds you see out there. And then a quick chat on flood zones. If you've never heard of them, this is kind of a quick breakdown of how FEMA designates a flood zone. all things that are in a zone or one of these labels are basically in a participating FEMA flood community. Means either they've agreed to do certain mitigations or they've agreed to pool together as a community to kind of combat their flood risk. So you have the X, C, and B, those are considered their lowest hazard. It does not mean it has never flooded or won't flood or isn't in a flood zone. It actually means that it has flooded there, they just don't think it's as severe. Most of you might have heard the term 100-year flood zone or a 500-year flood zone. That's where they're putting this bucket. Then you have your A zone. So A with any number, A with any letter, that's kind of your medium hazard, but the highest inland hazard. So there's no ocean waves typically involved with this because that's, allotted for the V to any other letter VE zones, which are the highest. So the difference between A and V are basically the ocean. With V, it's for the velocity, so the waves coming in, which adds a different level versus inland flooding, where you typically would see it in your A or AEs or any of those bonus letters you have up there. Like it is more inland because it's not being pushed by ocean waves. So, and kind of already breezed through it there, the V zones, those are the highest hazard because the waves come unpredictably, unexpectedly, can be as high as they want to, and no matter how much we guess, we're never right. Then big topic here is mitigation. Again, thanks to Ryan, like these are the kind of things that Ryan can help with for sure. These are obviously on the big end of things, but that's the whole point of helping to get people back. So mitigation it's not new, it's been around a pretty long time. For as long as humans have wanted to control water and where it goes, there's been thought and process in place to kind of do that. With flood insurance, mitigation basically means what are you or your community doing to prevent flood from impacting you and your stuff and your buildings? So some of the big things or most common are levees and dams, raised foundations, certain floodways, flood vents in your homes or in your buildings. But sometimes more community-based or community-wide, they might have to pool together to do something different. One of the examples in my head is in Hoboken, New Jersey, the whole community, because they've been flooded so many times, had to kind of participate, which means they're paying via tax or whatever, to put in flood water vents that actually suck the water out of the street and try to get it out of there. So it's not one or two, it's like everywhere. So everyone that's participating in that community is kind of benefiting from what it's trying to mitigate. So far, so good. Maybe for most everyone there, at least as far as I know. And then the other big part of that is sometimes after a flooding event has occurred, different communities can be required to make changes. That could be to individual homes, to businesses, to streets, to floodways. And that's kind of actually at the direction of FEMA and or the local government in response to the flood damage that already occurred. The goal is to lessen that as much as you can. And this is one form of doing that isn't insurance. So just a quick recap. We're just going to kind of go through NFIP's offering this, private flood offers this, and kind of do the quick hot topics. So we'll talk about buildings, contents, whether it's business or personal. We'll go through a little bit of loss of use and business income, the difference between replacement cost policies and ACV policies, and then like basement coverages. That's a hot topic around here since last July's flooding anyway. So first, building coverage. Both offer building coverage, no problem. NFIP does have a max limit based on whatever type of building you are. Residential 250, commercial 500, condos, I think it's per unit and it depends on how many units you have in there. And typically it's one building per policy. Then in private, typically every building you can have limits or carriers offer limits up to the full replacement cost value. Different carriers might say it's either NFIP limits or the full limits. Others say whatever you want between this low number of typically I think it's 10,000 up to whatever the full replacement cost value is. And then there's even carriers out there that will schedule multiple buildings. I had one last week that was 19 buildings for a motel that had individual kind of condo unit looking things, but it was a motel. Put that all together in one, saved a lot of hassle and some extra trouble over there. Then we have contents coverage. Again, both offer contents coverage. So NFIP will have a maximum limit for contents. And again, it varies depending on the type of building you have. So residential has a 250 cap, might be 100K actually. Has a cap. Commercial has a cap as well. I think it's 500K. And so would condominiums based on their shared area of coverage. They also have some limits on the specific types of contents that are covered and where they are, but they can do contents only. So if you're a renter or a tenant in a building, like it's an option. And then on the private side, again, similar to before, full replacement cost limits are available for your contents. There are markets that will limit the type of contents that you have. For example, restaurants, paper goods, like that's going to be hard to want to cover. When it gets wet, it's gone. So it's like a lost cost. So if they store all that in their basement, that market probably isn't going to speak for it. However, there are ones out there that would offer on anything versus limiting it. Then there are carriers that might limit where your location of your contents could be. So just like the NFIP, if it's below subgrade, there are private markets that also limit it the same. They're using a similar form. But then there are others who say, I don't care where your stuff is. If you have contents coverage, wherever it is, if it fits the bill, we're going to do it. And they also can do contents only for business and residential. So loss of use. I guess it'll be a little tipsy here, but NFIP isn't addressing this currently, but I imagine it's coming. Like they're going to have to answer for this just like we have to in the private market. So we do offer loss of use on residential homes. Some carriers kind of just include this 5,000 limit, but then there are other cases where they'll offer more. So let's say you live somewhere so remote that it would take like 20K for you to be able to leave your house due to this flood to get it fixed. Those options exist. Similar with business income, some private carriers will say, here's a little bit. Then there's others that will say, how much do you need? So depending on what your need is, that range can vary. It has its own separate deductible, so something to consider there. But again, you could get it. If you have that risk exposure, there's a place you can get coverage for it. Now, similar difference. So with NFIP, they do offer ACV and RCV, but whichever one is less at the time of the claim is what they're going to base their payout to you on. So in the private market, it's pretty much all or RCV. There might be one out there that I'm not aware of, but they're all written on replacement cost value. Though you can actually take the option of choosing ACV at the time of a claim if that's a better payout for you. They're not looking for whichever is less. That's your choice. Once you agree to one or the other, that's the path you go in the event of a claim. And now basements. So as we know, it's okay, I know it's there, but so with basements, depending on the policy form that you have, it might limit what's below subgrade. That could be building specifically and or contents. Typically on the building subgrade, they're going to cover your wall studs. They're going to cover your electrical panels, anything specifically connected to the building that is down there. So like your heating system, water heater, stuff like that. And then your contents, they are not always going to cover everything. You typically with NFIP, you get a washer and a dryer, I believe a freezer. I think there might be one or two other type things down there, like a water filtration system or something of the like. So you've got these in a bucket. Now, there are private markets that use that same form that will limit the same way. But there are also private markets out there that kind of range in limits, meaning they don't care where your stuff is. They're just silent about it. You have contents coverage and your claims proven to show that you have 63,000 in contents. They're not going to say it was here or here. Here's your coverage. Like that's it. There are some policy carriers that you can actually buy back basement contents. So whatever you want to keep down there, sports memorabilia might be limited. If you had furs or private art, I think that's also limited. But if you just had, your kids' clothes or soccer uniforms, like that's what's going to be covered down there. So quick recap. They both offer building coverage. You can buy this much from NFIP. You can have whatever your thing is worth over here. Similar for contents. They don't do business income yet, but I imagine that's coming. Private, we already do that. Loss of use, again, no, it's NFIP, but we are still doing that in private. There are a few write your owns that might tack on that 5K in there. So if you need it, you might need it. Worth getting it. Similar with that ACV, RCV payout, whichever is less, whichever option is elected at the time of a loss. Business contents, limited versus it could also be limited or not limited over here. It just depends on the policy you're buying and the risk and the needs that you have. All right, so again, this is my own home. So I'm very for sure about everything that happened. And for me, it still flashes before my eyes. So let's just set the stage. This is a single family home. It's a 2-story, built in 1965. I'm definitely pre-firm, so no elevation certificate or whatever. I'm in Williamstown, Vermont. It's literally just down the road from our office here. 265 at RCV for on the building, 135K in contents. It was fully finished. So I'm in an X zone. My home is about 30 feet up from a small brook at the time pre-flood. My lowest level is actually like a walkout. So 3 sides are underground, and for private, it's not considered a basement. NFIP did consider it a basement because it was a dugout to get there. Everything about my house is in that building, in that lower section. So that's heat, that's plumbing, that's electrical, that's my washer and dryer, definitely a freezer for my giant growing family, and stuff, so much stuff, outdoor equipment that you have to store, snow blower, the generator that wasn't quite where it needed to be, and it was fully finished. So there's an active bathroom, a bedroom, a living room, and a storage area. So your average Vermont finished basement. Before the flood, my options were basically this, or these were the best options that I found for us when we bought this house a couple years ago. So standard NFIP policy with their max limits, and I took their lowest deductible, which is $1,000. So 1,800 taxes and fees. Similarly, in the private market, a little more coverage at 265, which is what my building was actually worth, and my contents, a little more coverage just because that was how much it was worth. Similar deductible, 2,200 taxes and fees. So about $400 difference, but about 30,000, well, almost 45, 50, about 50,000 more in coverage, so to speak, in the private policy. So not a bad change. But then, what happened here? So my whole lower level, that is the picture of us coming down the stairs after everything to see what we could save, no saving, but 10 feet of water basically filled that lower level, and it stayed there for 3 days before it started draining. Everything down there was definitely submerged, so everything had to be replaced. Everything that was contents related had to be replaced. On the outside, trees that had come down this tiny brook that became a raging river, literal trees, basically poked right through the house. There were giant gaping holes along the whole outside, like dot, dot, dot. Similar to the thinking of like the Titanic, how the iceberg just made little holes, but those holes just let everything in. Now, in that water, it was fuel, wastewater, muck, any other kind of debris you can imagine. There was someone's kid's pool and a truck that floated down that somehow ended up on the inside. So lots from outside came inside. What actually had happened about a mile up from me, the floodway that we had built, I want to say back in the 80s, we as the town of Williamstown had put that in the 80s. It was overwhelmed and it failed. So when that failed, all of that water had to go somewhere. And where it went, it pushed a mobile home and a car trailer with a car actually in it were pushed into the riverway. And basically the waterway made its own new direction, which is how it came to my house, which is, again, 30 feet up from any water before. So, but now it's here, and it was directly into the house. This is what it looks like to empty your entire lower level of everything and anything, and what it takes to clean it up. This took 3 days to make the mountain, and then another day and a half to have it kind of picked up, pulled out, and put into a dumpster to get out.
Let that sink in there. Oops, there we go.
And now this is what it cost. So When you look at the plumbing, everything had to be fixed, not because it got wet, but actually because the things floating around in there ripped pipes, broke pipes. Our water heater ended up in a room on the whole other end of the house, totally disconnected. So mind you, fresh water had been pouring in over that same time from all the pipes. We didn't have that time or wherewithal, I think, to turn off the water. It came so fast. The heating unit, which we had just barely put in and it cost us $9,000 about a year before, cost us a lot more to put it in a second time. Similar with all the electrical, had to be redone. Our fuel tank, which is also in our basement, actually floated and broke away and broke its legs. So it had been half full, I think, at the time. So we had to have it fully pumped out, all fixed up, and then pumped back in. Our stuff. There was so much stuff. No matter what I think about and all the receipts and everything we were able to find from our phones, because nothing lived in that space. Like, I still don't even know if that's the right amount, but we settled at 51,000 in our personal contents and all the things in there. Now, this whole exterior wall that you see, the whole thing had to go because there were so many compromised pieces from what kind of pushed through. So that had its own price tag. Then everything that you see there was also, again, insulated on the other side and was sheetrocked and fully finished. Now, plus from there, the cleanup. I don't mean the scooping up of the debris and bringing it outside. I don't mean any of that. I mean the cleanup. So once we did all that, someone actually had to come in and clean everything because that's wastewater that was fuel from people's cars and various other things that went in there, muck, and I don't even know what, but they bleached for days. They did a bunch of other things for the wood that we could keep. We mostly had to replace some, but just to get it clean, like we're a family, we want to be able to move back in, but that was kind of scary. But then the debris removal, all my amazing stuff. The price tag to come in was not the same as the price tag going out because I had to pay for someone to take it and still had to then replace it. So all in, we estimated about $101,000 worth of damage between all those things. And I kind of give a quick breakdown down there. So contents being that 51, 57-ish and a little more for the building and it's fixing all those machines and whatnot. And then about 13K in cleanup and debris removal. Did you go back? Okay.
Oh, sorry.
One more forward.
Oh, go forward.
Yeah, there we go. So, wait, that one. So ultimately, had I had, well, I know which one I had. NFIP policy, the building payout, certain things are going to be covered and certain things were not going to be covered. So due to that limitation, similar on the contents, total payout, $45,000. Now my loss was 101,000. So there's a big gap there. And then had I had private insurance, this is kind of similarly how it would have broken out. My damage would have been assessed, less my deductible, and the debris removal and cleanup is in addition to or included depending on which policy you might have. In this case, it was one that was in addition to your limits. So total payout over there, a little less than $99,000. A lot less of a gap for $101,000. Next page. Now, after the flood. So now I've had a flood with $100,000 worth of damage across everything. My price tag is quite different. If you remember at the beginning, NFIP was around $1,800. Private was about $22,000. And again, they're still different, slight changes in coverage, but it's a big steep gap. When the loss catches up, it always comes knocking. So something to consider there. I might have been more whole with the private policy, but I still would be paying a future bill. Similar with the NFIP, I would have been less whole, but I'd still be paying more when it catches up, So next one, if you don't mind, Mr. Evan. These are the things I hope we can kind of chat about. Where was this example? This example was in an X zone. So 100-year, 500-year couldn't happen again, right? But what I really want everyone to think about and kind of talk to themselves about, it doesn't really matter what zone you're in. If it can rain at your house, it rains everywhere. Like you can flood. By all accounts, it's miraculous that all these series of things happen to make my house flood. But the fact is this, since then, My house has almost flooded 3 more times. There's not a mobile home there anymore in the river. There's not a car trailer floating in the river blocking its path. This is the new path. We did fix the floodway in town. That doesn't change the fact that more water all the time and all this rain has now changed. That tiny brook that I used to have is now like almost 10 feet wide, and probably 3 or 4 feet deep all the time. But again, my house is now almost flooded more. But I did a few things to kind of prevent it from making it worse on the inside. So the second question up here are kind of the things to talk about: mitigation, insurance, a combination, nothing. Something about any of these is only going to help. Having nothing, you accept that, you're self-insuring, you'll fix anything that goes wrong. If you try to do some mitigation, which for me, what I did to prevent those second and third floods from coming in, we built basically flood doors that go in front of the 2 doors down there. Because now that that wall is new, hopefully another tree won't come through, but it actually let water come up 2.5 feet on the outside. We got barely a trickle on the inside for those second 2 storms. Now, had it been 10 feet again, not a chance. I would have been in the same boat. But mitigation, you're going to try some things. If they work, great. It's going to lessen the loss. Then you have insurance. Do you want the guarantee of whatever happens, I'm good? I'll be able to fix it, move, or try to make it a little better. Or do you need a little bit of both? For me, from my perspective, again, being the example here, like I think we need both. Self-insurance isn't enough for me. I can tell you it was not easy to figure out how to fix all of these things with the shortfalls that we had, given what our goal was. Like I don't have 100K to pay out. So part of that being when a flood event like this happens and so many people are affected, we're all scrambling for the same resources. We all want to need the same thing. So sure, people insurance might get something a little faster or slower, but it's really about the time and energy and everyone's effort to try to fix everyone. It just makes the price and the cost of everything go up that much. Had I had this loss, I think 4 years ago, it might have been a $30,000 loss, but times they're changing. So the price of wood that it would have cost me 4 years ago now cost me a lot more. So keep that in mind when you're thinking of your own risk. Like, is 250 enough? If your house is worth $1 million, I wouldn't want to write a $750,000 check, but some people can do that. And like, these are the options and the things to be talking about. If you can self-insure that way and you're good with that, do it. But if you can pay a little bit to get a lot of insurance, like I'm in for that now. Like I'm paying. It's a lot more money now to still get a lot of coverage, but I'm in there. So I get that. But I also felt mitigation was necessary because I don't want it to happen anymore. And then the third piece here is who's most in need of insurance? Can anyone be impacted by flooding? Well, I am originally from New Jersey, so I'm well aware of Sandy. I've now lived here through this, which, by the way, was not even a named storm. It was just a rainstorm. So we don't get a fancy title to say it's just called Vermont flooding, but it impacted so many people. And a lot of those people that were impacted that didn't even know. I worry the most for renters or tenants in buildings because your stuff isn't covered by your building owner's policy. So you have to protect yourself. When I think to, again, Montpelier, Vermont, which is another area that was severely impacted, when buildings were compromised because their lower level was, everyone above them also has to go. They may not have been specifically impacted by flood, but they had to go, like they had to move. So everyone you meet basically might need flood insurance if they own something that is precious to them or important to them that a flood could just take away or ruin or forever damage. So what do you guys think? Is there any questions or comments or thoughts about these? Because us talking is how all of us and everyone can kind of get a better handle on what we can do to protect ourselves, prepare for things like these, and, you know, get to know the whole kind of community of what happens after a claim.
So feel free to throw up those questions in the chat. And, as you're thinking about that, I thought that, I think it was quite a feat that you've got 19 carriers to all agree to a single set of questions that allows, you to look for really the best solution for any sort of situation. So what I thought maybe we could do is just have a quick look at this and maybe talk through what those key questions are, because clearly those are really the most important questions. So let me see if I can pull this off here. Let's see. Here it is. We got a question here. Can you talk about condo unit owners and their need for flood coverage on their individual unit, even if the association doesn't carry flood coverage?
So this is my second least favorite thing to talk about, not because of the topic, but because of what it creates or what it is. So when you have a condo association, it means the association owns the walls out. They own the actual structure that all these units are in. Now, a condo unit owner is only getting walls in. So walls in means your stuff on the inside, things you might have done to it. And the reason why I hate this is, if you're telling me your association doesn't have coverage, it means everything that you might touch from the wall out doesn't exist. So if the entire building is compromised and you have unit coverage, that's great. It'll cover you, but it won't help you rebuild the structure. It's only going to help you get your structure or your stuff back that was inside. So that really shouldn't, that's a big gap in insurance. And associations feeling that that's cool, they might find themselves, on the short end of that, because no one's going to pay you to rebuild the building for your condo unit itself. Your unit is only going to cover like walls in. So your stuff, your couch, table, if you had a cool built-in, like one of those Murphy beds, sure, it's fully attached to that interior wall, but it's not going to help you with plumbing, heating, unless that stuff's already in your unit, contained within. So not a good choice. If you are a condo unit, you need a coverage. If you're in an association, the association needs the coverage because you're each responsible for a different piece, but you need both to put yourself back to whole, for sure.
All right. Thank you for the question there. And Sharon's asking, what happens if the flood only covers 1 acre? FEMA will not define it as a flood, and if so, does property insurance cover damage?
So that's a great question. If you have a FEMA policy and it doesn't have enough acres, so can you flip back to the flood definition if you don't mind, for FEMA?
Sorry.
So it's under 2. One of their clauses here in their own definition is it's or. So it doesn't have to be less than an acre to be labeled a flood. It just means 2 or more properties have to be impacted. It doesn't have to cover 2 acres. It's just saying if you have one house that's in a 3-acre plot, that person ain't getting any help unless one of his neighbors outside that 3 acres is getting a claim also. But no, your property insurance will never cover flood insurance. They have not covered flood insurance for a very, very, very long time. Probably right around 74 when FEMA kind of came out with it, because that's not their intention. They're not meaning to cover flood. They're going to cover water damage, but water damage is from things that happen within you and your building versus a flood from down the road coming to see you. So property is not going to cover that. With asterisk, a DIC policy might do that, but they're rare and few and far between that they don't basically strip every piece of everything out to just give you what they want to give you.
Do you want to elaborate on what a DIC policy is? So
a difference in conditions policy is basically taking the original ISO forms and just rips out everything and sticks in one that says flood or earthquake or blanket this. So it's basically a built policy versus a specific form that follows through the whole thing. And rare, don't recommend.
So,
and you wanted to talk about our app.
Yeah,
it's true.
Feel free to hop in, but I'd like to just touch on this because I think this is.
Well, I love our app. I've worked very hard to not have to ask questions I don't want to know. More specifically, everyone wants the same information. They just, everybody's app was putting it in a different place, and I'm not a fan. I'm all about, like, tell me what you actually have to know and why it's important. And if I agree, we'll make sure it's on our app. So this is our newest version because everyone is so extra now about foundations. whether you have a basement or not tells me, someone getting this app, I want to look for a carrier that will give coverage for anything in the basement. If it's a finished basement, if it's a partially finished, or if you have stuff down there, because I don't want you to have a gap. That's not my intention. So I always look. If this isn't filled out, I typically go with it probably has one just in case, look for that carrier. And that might mean I have to send you 2 or 3 quotes because I don't know. But knowing whether you have a basement or not really impacts carriers to go to and the risk exposures you have. Now, I don't necessarily need the flood zone from you, but some lenders will say, I need it to be this letter. Okay, you put whatever you want in there. If you didn't, it's not going to affect me. I do need to know when it was built, because when it was built tells me, is it pre-firm or post-firm? And all that just means is, was it bound to flood regulation for how to build, when to build, and what to build, which is after 1974, depending on where you live, or not. So pre-firm means we built it like we built it, and we haven't necessarily done anything to mitigate flood. Square footage tells me, how big is this building? What is its risk exposure in that regard? How many floors does it have? So if in the case of a flood policy, as we all know, the first floor, sometimes the second floor, maybe not the third and fourth floor are going to be impacted. Or if the fourth floor is, we're all in some trouble. But it can happen and it has happened. So when we look at this, if there's 4 floors, and from an underwriting perspective, like my biggest concern is those first 2 floors. Okay, how much square footage do they got going on in there? So something to consider for us there. Whether or not it's on pilings, typically if you're on pilings, you already know it's wet in your area. It just tells us that they've already done some mitigation. If you're on pilings, it means it gets wet there and you've kind of positioned your home to accept some. Just a tool for us to say, what's going on here. Is the building elevated? Most of you may or may not know, NFIP used to require an elevation certificate for anything built post-firm. When they did their 2.0 rater update, they no longer require that. So if you have one and it says good things, we want to use that. That can get you credit in the private world. If not, you don't have one, that's okay. Or if not, it's not so favorable. Sometimes it's better to use the markets, on my end anyway, that map it themselves because they think they know or have better data. So we let them do their thing. But if it's elevated because your house was built up 15 feet to avoid flood, I want to know that. Construction-wise, differences between frame, fire resistive, masonry, if it's just metal, stuff like that. It's just one of those background factors with any building. We want to know what it would take. Whether it's your primary home or not, it's just telling us which form that you might want this to be on. It's not necessarily about getting credit or not credit, because that stuff with NFIP is out the window. But it's just telling us, if this is your primary home, then good. We want to make sure you're on a residential form so that it responds to your coverage needs and wants and kind of fits the bill for what you actually need to see. And then if you had prior flood losses, we are asking, just like we would for any other type of risk, to know, because it tells us kind of if our flood score, so I talked about carriers that have their own mapping, they create flood scores. Ooh, I think this one has been hit a couple times, but I don't know. So they give it a score. But if you tell us that there's been a flood loss, it helps us know, like, what are the chances of this happening again? I won't bore you with the kind of background, what are you actuary, whatever that they do, it's beyond even me, but it's just something to go into the consideration of writing a risk. It's good business practice, it's smart practice, but that's why we want to know. And if you say, I might have had a loss, but I didn't have insurance, that's not what I mean. I'm asking you if you've had a prior flood loss that you could give me loss runs for. That's what they're asking. And that's why if it's a yes, they want you to have that attachment.
Made a claim.
Yep. Who are you and what do you do when you live there? So your occupancy, single family, commercial, if you're an apartment building or a duplex, again, we just want to make sure it's on the right kind of form to answer for what's actually there. Commercial condos and residential condos, we want to know that, and right below it, we hope to know the number of units, because again, that helps us comparing back to any of the other answers, numbers of floors, whatnot, and kind of breaking down what the exposure actually is. And then if it is a business, we hope to know what's going on. Like, I want to know if you're a restaurant. I'd like to know if you're a manufacturer of paper lanterns. Like, those are things that we have to take into consideration when underwriting just in general. And then this next section is, I need to know right now, even though we know it changes by second, by minute of the day, the replacement cost values for your building, contents if you want that, business income, we want to know your full 12-month value for that estimated, whatever ideal number, whatever you'd like to put there. And then the second section of that is, what limits do you actually want? At the top of this, we kind of went over, NFIP has their max limits, and that's fine. But if you want higher limits, or you want limits that match your full values, and you put that here, that's what I'm going to go look for. That may not be what I come back with, but that's what I'm going to look for. If I can find it, I'm going to say, here you go. And if I say, oh, this one can't quite get there, but it's pretty good rate, it's got these forms, whatnot, that's for me to come back to you and say, here's the options I came up with that meet these risk exposures, and similar with the deductible requested. Now, the lower section here is basically a checklist. If you have an elevation certificate, great, attach it. If you don't, again, I have so many programs that think they know more than that anyway. We actually offer not just primary flood, we offer excess too. So you have an NFIP policy, you like that rate and it's great for you, fine. We can get you an excess policy that can go over that for additional limits on the building, on the contents, on business income. And then you would just check that so I know what I'm looking for ultimately. And then I don't need it to be signed unless you're binding, and the rest of that really doesn't matter. But that's all we really need, because our systems and all of these programs that I work with use a lot of data points, a lot of mapping. They look at rain calculations. They look at things even I can't imagine, and compile all this data to kind of give me the best tool to see if I can fit this in their program. So one page. Now, it's actually 2 pages now, but it's really one. Up at the top on that first page, it was asking you to pick your building type or your basement type. Ultimately, you take those numbers correspond with the pictures further down here on page 2. So it helps you figure it out. These look very similar to the old NFIP elevation certificates. So it's here. Find the one that best fits you. So the reason why mine didn't fit the number 7 path there is because the dirt comes around to the backside a little on 2 corners. So it's mostly for underground, but like a section isn't. So super weird, some precise little thing that you don't think about, but that's why these pictures are here, is to help make it easy for you to be able to answer those questions on the first page.
Great. All right, I had 2 more questions come in here. Just confirming, if property has flood damage and has property but no flood insurance, there's no coverage, correct?
Correct. And read your policy form for your property, but pretty unlikely that you're going to find that in there.
And does private flood have co-insurance?
Ooh, that's a good question. So sometimes.
Christine DiMartino.
Sometimes. So a lot of private market that are doing, say, residential, they don't necessarily have a co-insurance. They might have an insurance to value, but not all of them. Then like in the commercial aspect, similarly, they're going to say, this is, it's a 90% values clause, which is different than the first one, saying, I have declared these to be at least 90% of the values, that RCV section, but it's no co-insurance and there's no penalty in that. And then there are others that do have a penalty of, you must insure at least 80%. That's the highest I've seen. It's out of my 19, it's only 1 carrier that does that, but they're also particular, and that same carrier allows you have to buy back things. So basement contents coverage, basement coverage in general. So it just depends on which carrier you have sometimes, but it does have to be called out very directly right next to your limits. So just look at your policy form. It has to say right next to the limits. It's a requirement for private flood.
So how do you insure to value if there are maximum limits?
So with NFIP, you can't. That's the problem, unless your building is only worth 250 or 500. With private insurance, if you call me up and say, I got this building, whether personal or commercial, it's worth 2 million. How much coverage can I get? I'm going to say 2 million, because what we're offering here is for you to insure the entire thing, less your deductible. So that'll be whatever that lowest or max deductible is there, but we want you to have full coverage. I would hate, or I do hate having been the one to get it, where my house is worth this much, my damage was this much, and I get a check that isn't enough. That's not our intention. So how can we do that? All of our programs work with us to say, if you are this or this. So I'm going to say, like, if you're under 2.5 million in limits that you need, value or otherwise, like if you're under that, this program likes it. Up to 5 million for this program. So it just depends on which program you fit in by your value. $10 million building, this program does that, but these two won't because it's outside their threshold, so to speak.
So does NFIP have a co-insurance requirement if they're not even offering maximum limits? A lot of
So they don't.
They don't. Okay, so NFIP doesn't have. Okay, gotcha. Great. All right. Any other questions, guys? Let's see, one thing that I always find interesting and also just, really challenging to manage is all of the differences in flood definitions between the different carriers. Could you go in a little more detail about like what are the common differences and what to kind of be looking out for, I guess, in your policy?
So, all right, go back to the FEMA one.
Yeah. Let's see.
So I think the biggest change would be that instead of it saying the 2 or more acres, I would say it's 1 or more. Instead of 2 or more properties, it will say 1 or more, but in that 1 acre. So it's really similar to what NFIP has, but it just either gets broader or smaller. So NFIP will include like I think we talked about that, it's a terrible word to say, subsistence, or when basically you have the collapse. When you have the collapse, that's a good one to put up there. So it's that one.
Yeah, this one here. Yeah, sorry, it's a little look at here, a little easier to see.
All right, sorry. So mud flow, or I can't read it, it's too tiny.
Here you go.
All right, that one. So unusual or rapid accumulation of runoff from any source. So a private market might say that with any source, but not have 3 different bullets. An inundation of water from any source. What that means is it's kind of open-ended or more selectable, or there's even a better word for it that I can't think of, where it's subjective. So at the time of the claim, well, what was the source? It was a fire hydrant that exploded on the street and flooded and kept going for 10 days. Okay, that meets the definition, unless, if you're looking here at NFIP, overflow of inland or tidal waters, it's not that, but it's an unusual and a rapid accumulation of water from any source. So big. Just in your private flood, it's going to just say any source, and they're not going to question it. They're not going to come back to you and say, what was the source again? Like, that's just not how they're going to look at it. So really the easiest way to kind of break that down is at the top there in their general description where it says of 2 or more, it would just say of 1 or more. So that's one way that they made it more broad.
Another one here. Question. Flood zones trigger owners to purchase flood insurance, but what are the triggers for areas that have flooding due to excessive rain?
So that's a good question. So I encourage all of you to go out of here not thinking about flood zones. Throw that right out of your brain. So as I said at the top with X zones, a lender doesn't require you to get coverage in an X zone, but an X zone is literally the labeling telling you it has flooded there before. So the flood zones are telling you your exposure or your risk. The lenders are only caring about their highest worths of that. So the reason why a lender only requires any building in an A or a V zone is because those are the most likely to happen. Based on 1974 knowledge, those are the most likely to occur, and it will have the most impact on the lender. Now, I can tell you for sure that in the last 10 years alone, that we've had more claims from X zones or zones that don't even exist. So people who've never been mapped, people who have never done like community flood planning, or maybe they don't think they need it or didn't need it, or the government didn't find that way. So it just depends, right? I lived in an X zone. I was told that I have barely a risk, once in 100 years tops. On the flood maps for my hair area, the little brook that was there when we bought it didn't even exist on any map. But now it's like 10 feet wide. Like it's really there now. So hard to kind of break that down in a better way, but the flood zone doesn't mean what we think it means. Flood zone just means in 1970s when they developed this plan that they needed a way to kind of say, these guys have exposure, these guys don't. But then these guys are the most exposed, but they're all exposed if we give them a letter. So a lender will only push for the A or the V. That also might be changing. There were a lot of lenders that had, again, my town in Williamstown, right next to that floodway that gave way was a brand new bank branch. So they're taking a look at things a little differently now. They didn't necessarily need flood coverage because there was 20 something feet of space for that water to climb in that floodway. But their building definitely needed it. So perspective, throw that out the window. If it rains at your house, you can flood. Now, NFIP can only offer you flood insurance in participating communities that they have kind of set up already. In private, there are carriers that don't care. If it rains at your house, you want to protect yourself, we can do that.
So how do you know if your property is in an X zone or I guess just what zone? How do you know it's on your?
Good question. So there's actually a public website, NFIP mapping service. So if you Googled NFIP or FEMA mapping service, it'll let you put in your address and boom, it'll tell you.
We could share a link with you all after this.
That's easy breezy. But also any town that if you like coastal towns, of course, if you have like a GIS system or anything like that where you might get property tax records, sometimes they allow you to do like a little ferment about it. But on my end, that's something I get calls for all the time. I have mapping services. I use the same exact one I'm telling you to kind of compare. But I get calls on that all the time. Diana, is this address in the flood zone? Yes, here's the zone. Diana, is this one in a flood zone? Here, give it. So your agent can definitely pull and help that without a doubt. If you're like the insured side yourself, an agent can help you with that. An agent who couldn't find one can also get help from me for that kind of thing. But there are public websites out there as well.
So if I have a private policy on my first floor condo and the association has no flood insurance, if I buy a flood policy and insure the dwelling for my betterments and fully insure my contents, will I get paid for the building portion, even if I can't rebuild because the association wasn't covered?
So it's walls in. Your improvements and betterments will not go outside of the studs. So, for example, this is probably a poor example. 1 cup, 2 cup. This is your apartment or this is your condo unit. This is the building. Everything that's this and damaged, you get nothing for. Only this. That's it. It's that simple. So you have coverage for the coverage, but you never had coverage on the building itself because that's the association's responsibility.
But will I get paid for a building that isn't being rebuilt?
You didn't have any building coverage, so no. You only get your stuff. So like I talked about that Murphy bed. You built it a great Murphy bed that's attached to the inside walls in of your unit. Whatever that price tag was, you're going to get coverage for that because it's affixed to the building on the inside your 4 walls. Now, if your furnace isn't there and it's in the basement, you're not getting money for the furnace. You're only going to get anything that damaged inside. So after the drywall and getting in or past that going towards the out, you don't have any coverage for that as a unit owner. The only way to get that is with the association coverage. Or if it was an individual unit. So let's say you have a condo unit that's all by yourself in a building all of its own, you can get a coverage for that whole thing by yourself.
Got some other, okay here. But your betterments is the quote dwelling coverage. Can I get my dwelling coverage as a condo owner if the condo is not being rebuilt?
So improvements or betterments, you're thinking from a property perspective. That's not how it works in flood. So your improvements or betterments are going to be contents on your flood policy as a condo owner. So there won't be any building coverage. Your improvements or betterments kind of go into that. So Murphy bed, it's attached to the wall. That's basically a hideaway bed that folds up. It's connected though. Like you'll get coverage for that because it's technically contents because you only own the sheetrock forward into your building. There will be no coverage for the building itself. No.
That's more. bubbles coming in here. Keep the questions coming. I did just want to let everybody know also, we're going to be doing a 2-hour version of this in May. That is actually teaching the 2-hour version class at conferences around the country. It's going to be registered for continuing education credit for producers. And I think we're in 15 states now, hopefully actually in all 50 states by June. So,
and I do talk about condo associations.
Yeah.
So I did a real life example of my own as a primary home here, but in that 2-hour, we go over an example of a commercial building in Montpelier, and then a condo association that was literally swallowed by the river, the entire building in Bennington. So
we'll dive deeper into that in the May, and I'll send you all a link for that once we actually have that all published. But we got another couple questions here though. A basement unit condo, how does the unit owner cover their interior cabinets, et cetera?
So
take care, Sharon. Thanks for coming.
It just depends on where you go. So an NFIP policy isn't going to help you. But a private market policy, you need one of those carriers that doesn't care where your stuff is. So therefore it doesn't care where your unit is. Typically that sub-level apartment or condo unit is more difficult because that is the first exposure when it comes to flood, right? Anything that comes through the front door is going down first, and it's going to fill that one first. So it can be done, definitely offered in the private market, but a FEMA policy, I'd be really cautious because a lot of the things that apply to you as that unit owner are subgrade, so it's not going to cover. So similar to the example I have up there of why payments were reduced significantly to get to where we needed to be.
So I actually have to let Diana go. She's got a hard stop here at 1, but thank you all so much for coming. Again, I'm going to follow up with some more information. And
send the questions. I can answer them in an email.
And yeah, we'll just keep the channels open and yeah, have a great rest of your day.
Thanks guys so much. Happy lunching.